Welcome, everybody. This is George Veter, Veter Financial, welcoming you into a new year. It's almost the end of January. We're a little late in having this video blog, but here we are before we turn the page to February anyway. A couple of things are on my mind. First of all, I hope you had a wonderful holiday season and that you've set your goals for this year and your intentions, and that you've moved into those things to make you a better, happier, more fulfilled person, and helping you to bless the lives of all those that are around you, which has been typical of the people I get to work with. Now, to catch you up with the market, we had a little bit of a sell-off. It's the 27th today. And when I checked the market before doing this video blog, it was about 11 o'clock, and we had a little bit of a down day in technology. In fact, NVIDIA, which has been the most, I would say by most people's measure, the most successful technology play for the last 2 years, was down significant, about 17%, based on some concern over Chinese competition. And then some of the other markets that have been a little bit more boring, we might say, in reference to their returns, are what everybody's interested in today. So like the oil and gas plays and some of the more Dow component brick and mortar, not fast growing but very stable business models, those actually are trading better today than the sexier, let's say, technology plays. So right now, just to review, the NASDAQ for the year since January 1st is up just a tick, 0.08, essentially flat. The S&P is up 2.04, the Dow's up 4.99. Kind of a reversal in roles from last year where the Dow underperformed the S&P because of its lack of technology as a weighting versus the S&P or certainly the NASDAQ. This year it's looking better. The Russell's up 2.12, which is the small cap index. EFI index, Europe and Asia, is up 4.83. And remember, we were running from those stocks over the tariff concern just 30 days ago. They're one of the best performers. Bonds are up 0.6, which is kind of normal flow for bonds. And emerging markets are up 0.89, still trailing behind the other indices, but positive on the year. And again, NVIDIA down, depending on when you're looking at during the day, between 12 and 17% today, but having a significant hit today on concerns over competition. So the whole chip sector is kind of reflecting that, not just NVIDIA, but NVIDIA is kind of the center of that storm. Now, one of the things that this reminds me of is that we have to pay attention to concentration risk. No matter how much we fall in love with a stock, which NVIDIA would definitely be a darling of the stock market for the last 2 years, something can happen. In this case, it can be threatened by competition overseas or whatever. The CEO can say something that we don't like, or we can have maybe just a little change in the future expectations of AI monetization, whatever it is. And those stocks that we think are no-miss stocks can take big moves to the downside. I've seen it happen in my career over and over, really with any theme that you want to focus on. So it's a reminder when this happens, NVIDIA's big down swoop today, that you can't focus everything on one idea that you think is a no-miss. You have to stay diversified, and you can't get sucked into a concentration risk in your portfolio. And we continually stand for staying super diversified in our portfolios, as you know. Also, we can depend on the market to do very few things because it changes all the time, but we can depend on the market to overreact. I don't know what's going to happen tomorrow, but I can promise you the market will probably make more of it than they really should make of it. For example, when President Trump was elected and the polls closed, we had that big day. Small caps were up 5.5%. Most of the other averages were up about 2.5% in one day. As if, because President Trump is now president for the next 4 years, it's all unicorns and rainbows. Probably not the case economically, but it felt like that for a minute, and so we overreacted to the upside. A lot of that settled down. And then in December, we had the Fed meeting, and the Fed conditioned investors to look forward to maybe 2 cuts instead of 4 cuts with interest rates in 2025. Now that doesn't sound like the end of the world, but the market kind of took it like that and overreacted to the downside. And then we had NVIDIA's news today where we had a huge reaction to the downside. That's probably all overreactions. Now, How do we exploit that as investors? Well, we buy into the overreactions. If something goes down way more than it should based on that emotional response, it's probably when we should pick some of that stuff up, right? Or when things get so bad, so overblown to the upside, when we have the opposite overreaction with something that sounds good, we should probably trim our position a little bit while it's at an all-time high. So use that to our advantage. Know the market's going to overreact, and then to do a little buying or a little selling based on that premise, because I promise you that the market has sold us that that's always going to happen, always has since I've been in the business. Now, I also want to just mention to you that, two of the characteristics of great investors are patience, okay? We have to have patience and we have to have faith. Now, sometimes we're a little low on both, myself especially included, but that's necessary to be successful in this game of building wealth over time, is to have patience, making sure that if it doesn't happen right now, that you maintain your faith that it will happen over time. Now, those of you that know me, I'm a cattle rancher, right? I run cows in 2 different ranches. I was born and raised. I'm a 5th generation cattle rancher, so that's very much deep into my DNA, and it crosses over in the way I look at money management in many aspects. But it hasn't rained much this year, as most of you know. We're way behind our normal rainfall totals. There's not the snow in the Sierras that we typically would have at the end of January. And so there's that part of me that wants to panic a little bit and say, oh my gosh, what if it doesn't rain? What if we don't really grow any grass this year? Got all these cattle turned out, and these horses turned out on grass, and that would be just awful. So our brain starts defaulting to that fear side, right, to protect ourselves in some way. But I also need to make sure that I exercise faith, because spring, not most of the time, not usually, not sometimes, but every time follows winter. And we'll have these periods where the seasons don't behave the way that we expect them to behave, but they always come around and give us what that season is supposed to give us. And the rain will come, and the snow will fall in the mountains, and the markets will respond to an expanding economy. So I'm reminding myself, as I'm reminding you, to make sure that we exercise patience when we have those moments where it's not as easy to be patient, and that we maintain our faith in both the capital markets and the miracle of capitalism, and that we get to participate in capitalism in today's age more than we've ever been able to, in a safer way. I mean, I just think it's a miracle that I'm grateful for every day. And make sure that you know that you can call us if you're low on either. If you're feeling a little impatient by whatever behavior the market's exhibiting, or if you're feeling like you're lacking faith that you're going to be able to accomplish your goals, please call myself, one of our reps, one of our key administrators, and we will let you borrow a little bit of our faith until your faith fills up a little bit. And we'll make it through another successful year like we have for years and years and years, and we'll be what you expect us to be. So welcome to the new year. I hope some of that made sense, and I look forward to our next conversation.